Hello value investors, thank you for joining me. Today I want to talk about Upstart, why Upstart is interesting and why its valuation is actually not as shocking as it first seems. So Upstart is a stock that has rallied significantly, and don't let that put you off. There's still a lot left of upside. So what is Upstart? So this is one of the stocks that I've been highlighting to my members on my marketplace, and what Upstart does is it allows the bank to verify the person that they are lending to, whether they are going to be able to repay the loan or not. So traditionally, a bank would use what's called a FICO score. The FICO score tells the bank whether the consumer is going to repay the loan, because that's what you want. If you're a bank, you want to pay the money out, you want to get paid back in. And it's sometimes certain people have low credit history or no credit history, or for whatever reason they're a migrant or whatever, and they don't really have a very good FICO rating. So they don't have a very good credit rating. What Upstart does is uses about 1,000 different variables, and it gets a lot of data, and it's much better able to predict whether that person is going to repay the loan or not. So it's a mobile, it's fully digital, and what banks like about it is that when Upstart says, okay, this person is approved for a loan, they have a default rate of 0.4%. This is really, really low. So I mean, for banks, this is like a no-brainer, because yes, you are having to pay Upstart, but you have a very low default rate. So it's not like your kind of customers are defaulting at 2% or 3%. It's like, it's practically, they know whether you're going to be able to pay that loan or not. So when that balanced, the growth rate here is just really, really fast. And now I'm like, you can't really compare with Q2 of last year, because Q2 last year kind of compressed as the economy went into kind of a spin. But for all intents and purposes, you can see here that the company is kind of growing at close to 200% year over year, probably a little bit even faster than that right now. It's really difficult to put a number what the rate of growth is going to be. But I mean, rest assured, we're talking about a really fast growing business model. And when it comes to investing in tech, typically the way I think about it is that you want to be positioning yourself as much as possible as buying the leaders in this space. You don't want to be buying necessarily in tech the kind of second player at a cheaper valuation. Yeah, the stock is cheaper for a reason. I mean, you can argue that anyway, that's my fault, and I prefer to kind of have that margin of safety that I'm backing up somebody that has a lot of skin in the game in terms of this management team. And even though, there was an article posted just a few days ago about them, the management kind of selling some of the shares, but they still own so much. I mean, it's no-brainer here. So in all intents, we've got a company where the management has a lot of skin in the game, and the company has a technology that is allowing it basically becomes like a low-cost a SaaS platform for banks. So it's sticky, and there is this kind of question mark that there is a lot of customer concentration, the people that are originating the loans, but that's diluting out quite, a reasonable rate. At the moment, kind of 2 customers account for approximately 69% of total revenues, but that's coming down over the last few quarters, and I suspect that by this time next year, we're kind of getting closer to probably 55%. So it's they are diversifying the revenue stream. Another thing that I wanted to highlight is that what analysts following the company expect. You can see here in the graph, there's a meaningful drop down that they're expecting for the next quarter. I think they just haven't really gotten around to upgrading what they suspect that next year is going to be, because they've already increased here. A few days ago, this was at 21% that they were expecting. Now they're expecting closer to 30%. But there's no way that this company is going to go from growing at such a fast growth rate to going to less than 30% by this time next year. It's just not going to happen. So they're like the point to focus on here is that it's profitable growth. So the quarter that they just went past, remember, this is still a company that's investing very aggressively for growth. They're not with their minds towards maximizing the bottom line, but nevertheless they got a 19% clean GAAP net margin. So that includes stock-based compensation, everything included back in. It's a very clean, profitable company. So if you're growing really, really fast and you're already profitable, I mean, it's difficult to value. I would just kind of start, just for the sake of conversation, Let's say that this year they're guiding to grow at 750 million. Let's say that they grow by 60% next year, which I think is very, very reasonable. That puts the revenue growth rate at 1.2 billion. So if we look out to that, the stock is priced at approximately 14 times, 15 times forward sales. That's not very, very expensive for a company that's profitable and growing at a very, very fast rate. Yes, there are some kind of competitors in the space. I highlight Sophie Technologies, and there is a part of, it's a fintech, and there are a lot of unknowns. And for example, I already highlighted that two of its customers account for a large portion of the revenue right there. So there are some risks. It's not risk-free, but I think that this is kind of very, very compelling. So this is one of the stocks that I'm quite excited about and wanted to share with you guys. Let me know what you think. And yeah, as always, don't forget to check out my marketplace. It's called Deep Value Returns, and I'll tell you the stocks I know, and I'm not going to replace you as an investor. It's just a place for you to kind of source 1 or 2 ideas a month, and you're going to say, okay, yeah, I would like that, I don't like that. Just kind of pick and choose and chat with our investment community. And as always, you're welcome to do a totally free trial, and you can cancel anytime before the 14 days, and you're not going to get charged anything at all. So